Hi, this is Randy Finney with the Right Side of the Chart, and today is Friday, June 8th, 2018. This video is part two of two on the XLP and my top picks within that sector. These are, went through all the components of XLP. There's 34 total, and of that, 25 stood out to me, which is an unusually high number within a sector. 25 charts stood out as pretty clearly bearish or bullish, and in some cases, what we're going to do, and I did in the last video, and I highly encourage you to watch that one first. A lot of talking points that were covered in there that I'm not going to mention in this one. We're just going to dive right into these charts. But we're going to look at the daily and weekly time frames. Some of these stocks stand out. On either the weekly time frame, which formulates the bigger picture, and or the daily time frame as well. Starting here is MDLZ. This one, we have almost divergence here on the arc. So we had a divergent low right here, and that led to a nice pop. You can see the small divergences back here. There was your divergent low at this point, and right here was your divergent low, divergence down there. And we have this almost divergence here. Really what stands out to me right now, more so than that, is this trading range. This stock has popped, put in a pretty bullish candle following that looks like a capitulation sell-off potentially. And we need a pop above there. It's about 39.82-ish, and you can see targets here at about 40.45, and then a target zone that runs from about 42 to 42.40 up here. And potentially, I mean, if there's a whole lot of legs left in this bull market, or at least in the consumer discretionary sector, or even in this stock alone, sometimes you can march to a different drumbeat within a sector. And that's certainly possible. Let's just look at the weekly chart. Here's a bigger picture. You have this primary uptrend line off to the 2009 lows, not off the lows, a little higher. You had to exclude. Sometimes you had a little capitulation, a big overshoot, move down. This trend line captures a lot more of the reaction, so I believe this to be the more accurate trend line for the bull market. And so this stock topped back here. It had a divergent high, it broke trend. So similar to a lot of the stocks that I covered in that previous video, the bigger picture looks like this. It looks like it's quite possible the bull market in this sector is over. But with that being said, there is tremendous amount of potential for bear market rallies. In fact, I love trading bear market rallies because they tend to be very powerful, and you can get in, get out. I think it's safe to say that this stock already had a, what is that, 8.5 year, almost 8.5 year uptrend. Doubt we're going to see another 8.5 years up. Anything's possible, but right now what stands out to me is after that divergent high here, we had a correction and then we put in this divergent low. So you can see on this weekly chart, and this weekly chart looks a little better to me than the daily chart there. We have bullish divergence with the PPO turning up here. So again, look for a possible kickback rally. And as I said in the previous video, these could turn out to be dead cat bounces or anything along those lines. And like any other trade, that's what stops are for. So you take a long position if you like the trade. There's maybe a downtrend line to watch. Again, look at that daily chart that I showed you, and a stop below that way. If these divergences don't pan out, then your losses are minimal. But if it does, even if we go up to that previous reaction high, you're talking a pretty good move in this stock, about 18 or so percent. And a lot of the consumer staples, they kick out dividends as well. That's the other nice thing. This one's paying about a 2.25% dividend. So let's move on to the next one. CL, Colgate Palmolive. We're on a weekly chart as we just left the last one. Colgate Palmolive, symbol CL. What stands out to me, we had a divergent high back here in 2015. That was followed by a sharp correction. That we actually had a flash crash on Colgate Palmolive. So it really took us from the highs to the low, counting that flash crash. And that was brief. But it did occur, and that's why that candle's there. A 29% drop. Fast forward few years, several years later actually, and wash, rinse, repeat. Another divergent high right there. And like they usually do, you can see the divergences marked down below here. And as they so often do, those divergences played out for correction, which so far has measured about, from highs to low, about a little over 21%. So what do I see right now? I'm looking at a stock that has fallen 21% to a pretty decent support level. If you exclude the flash crash candle, and again, you don't have a lot of trades that take place on that long candle, this is where trading normalized, and this is where we tested that level again on a subsequent low. We have a lot of reactions from above there. We had a reaction from below here, another one there. right there. So this is a pretty well-defined support zone. So here's a stock that has fallen 21% to support. This is the first oversold reading that we've had. I should say the third since this bull market began. You can see again going back to 2009, never other than these three instances has the RSI hit or crossed below the 30 level. We're there now. What would have happened the last two times if you went long when this stock was oversold? And again, you have to watch that first video if you didn't, because there's a caveat to buying oversold levels if this stock or any of these stocks that I'm covering are in the early stages of a new bear market, and that is because oversold can and often does become more oversold. In a bull market, it works great. Like I say, those readings are usually one and done. They're very fleeting, and they're great buying ups. So let's see what happens. There it is. So oversold at support. There was a trend line break as well right here. So the bearish case would have this stock right now just flagging, and all the bulls, just like bullish setups or bearish setups don't play out so well during uptrends, bullish setups do not play out that well during downtrends. So you want the glass half full case. I gave it to you a second ago. You want the glass half empty case. That is, this is a bear flag pattern, continuation pattern. And that stock breaks out, drops below 61.45, and then probably goes on to test that low back from that flash crash back there, as well as I could actually put a line there too. Actually, this is where I would see right here. I see reactions. This would be my target on the downside, 55.39. All right, next one up, EL. Estee Lauder companies. This is a divergent high on the weekly chart. We're still above trend, so you can't really knock it yet. As far as trying to short the stock or stating that the bull market is over in this one, because it's above trend right now. But it does have those negative divergences that are concerning and indicate a likely trend change is coming. This is a daily chart I jumped over to. Again, you can see the negative divergence. You can see clear negative divergences at this recent high. We are now challenging that high. And so what you want to watch for here is, can it take it out impulsively and can it stay above there? Usually, I'd say probably more than 50% of the time when a stock comes to challenge a previous high, especially during a bull market, even if it's going to fail, it's going to pop above there and run the stops and then reverse. So, we're testing that level now. This is technically, if we fail here, a double top high. However, if I had to put odds on it, I would say we go up a little bit, maybe extend these divergence lines that I have here right there. You can see still have negative divergence like this, and then reverse. So this is one that I would put on the short watch list. And target would be a pullback to this trend line. Look for one more reaction there, and then ultimately a breakdown of that trend line there. That's what I'd expect in EL. So like I told you in the previous video, the majority of setups that I'm looking at right now in this sector are bullish setups. However, there are some bearish setups, and that's one reason that I would rather sift through these, spend a little extra time, do a little extra legwork, and short the most bearish setups or go long the most bullish setups instead of trying to trade XLP, because you're in a sense spinning your wheels. Let's just say half the stocks in XLP, rise for the next couple months and the other half fall. XLP is going nowhere, but yet there was a lot of money to be made trading individual stocks. All right, so next one up, Stars, STZ, Constellation Brands, STZ, divergent high on the daily time frame here. We just had a divergent high at this point. You can see the negative divergence. We had a divergent high right here as well. Those lines should have been moved over a little bit. Divergence played out for a pretty decent correction, but this is really just an extension of those previous divergences. If you look at that, you extend the line. So either way, divergent high, but we've continued to find support on this trend line. So this is one I wouldn't be going long right now. You can, if you're bullish, your most objective area is to buy on a pullback to this trend line. That's your most objective long entry. Other than that, if it breaks the trend line, I have a support level here. All these lines are support. There's a big old gap to be backfilled right here. And trend indicator right now is bearish. So let's see what this one does. The weekly chart, I haven't marked this one up. Don't know why I didn't get to that before. I'd have to play around with it a little, see the best fit for a trend line, but maybe this one would work. And you can see that we're diverging as well in this weekly chart, and that's why this is one that I would stay away from on the long side at this point in time. All right, next up, SYY, that's Cisco Corp. That's the food company. You see the food trucks going around. They supply restaurants, not the chip switch maker or Cisco tech company. Here's your negative divergence on the weekly chart right here. You can see, yeah, this is a weekly chart right here. Negative divergence is not yet confirmed. That PPO is still pointing up. So is the RSI, so you don't have anything remotely close to a sell signal on this one yet. But an early sign might be a break of this trend line here, which would bring us down to this uptrend line. Let's look at the daily chart. You'll see that a little more clear. There's that same line, although this trend line would extend to the left of this chart. It was larger on the weekly, I believe. But there it is. Pretty well-defined trend line. Also negative divergence there on the daily chart. So you simply set a price alert. You create a trend line, set a price alert. You'll get an alert when that goes off and there's a potential short op. Take a look at it at the time when that alert triggers. Do you like the sector? Do you not like the sector? You don't want to swim against the tide. It'd be ideal if you're going to short any of these stocks or go long. You want the charts of the sector to confirm. And again, I went over that in the previous video. BF.B, this is Brown-Forman Corp Class B shares. What I see here is a pretty clean rising wedge. This one broke down, back tested the wedge for a little while, rolled over, came back tested it right at the apex of the wedge. And then at that point, we had pretty strong negative divergences, and this is what happens. You have a back test of a wedge, which in itself is a good shorting op, and you also have powerful negative divergences that span all the way back from December on the daily time frame. Doesn't get much better than that. I wish I would have saw it then. That was a drop so far about 14% in a matter of just, what is that? 2 weeks. I'll take 14% in 2 weeks any day. So there was a support level there. If we bounce back, what I'm trying to do is give you some objective levels. I try to do my best to not give hindsight analysis, tell you, oh, this was a great short back here, but what to do from this point. So here's a stock. It's bounced back to resistance. So you can maybe short it there. The next resistance level, there's a little reaction right there. Put a stop somewhere over there. And this one may take another thrust down. In fact, I favor that. I think maybe a little more upside, but I see it coming down here at least to this 15-ish level before all is said and done. Possibly more. Let's look at the weekly chart. There it is. This is a pretty ugly stock. Chart-wise. So what stands out to me? Well, back in 2015, we put in a divergent high. Then we came back. This is a very well-defined uptrend line. A lot of reactions along the way over the years. And then boom, we broke down. And this is what I talk about often. There's two ways for stocks to correct: in time and or price. This one did both. There's your price correction, dropped. I don't know. I could measure it out. I'm sure that's double digits, close to it. But it's also a correction in time, and more so in time. And then the stock rallied, and here we've come full circle. This is a very well-defined uptrend line, bearish right, perfect, clean, textbook bearish rising wedge, negative divergence. All the check boxes are checked, and especially the fact that when it broke down, it didn't limp through there. We had an impulsive breakdown that confirmed that wedge is a valid bearish technical pattern. So just from this alone, looking at this weekly chart, like I said on the daily, any kickback rallies aside, I think this one has more downside to go. Rarely do you see a little breakdown like this, especially impulsive, and then the stock just continues to or resumes its uptrend. We maybe get a little kickback rally soon, maybe not, but if we do, that might be a good shorting op for next leg down. MNST, Monster Beverage Corp. There's the energy drinks. Trend line, this one just respects these trend lines pretty well. You had a trend line, you had a breakdown, a correction. You had an uptrend line that never broke down. I just drew it there because it was a nice trend line. In fact, that trend line could maybe be extended. Yes, it could. Sure could. I should have done that before. I just caught that now doing this video. That's why I love doing these videos. Sometimes I catch things I missed before. Beautiful catch because it came in and captured this reaction, then broke down, back test. Doesn't get much better than that. So what you have here is a couple things on this chart that stand out. You had a divergent high at this point. You had a minor uptrend line. You had a breakdown within a very impulsive big red candle. Here, let's zoom in a little so you can really see this. There's that big red impulsive candle that confirms it. Kiss that long-term trend line from back here to the button and bounced, and then broke down, and now it's back testing. So PPO is curling up. which gives it, the guise of maybe we might get a bullish crossover, but sometimes these PPOs start to curl up or even crossover and then get rejected. What I'm also noticing is that this one hasn't yet. That's some pretty bearish technical action all in here recently. Trendline break, two trendline breaks, a lot of red impulsive candles, and what stands out to me is we didn't even hit the oversold level on the RSI yet. We hit it here, which was a good buying op, and we hit it here. You're usually going to get that on the corrections. And like I said, on bull market, those are great buying ops. However, we came close, but we didn't quite hit it yet. Maybe close enough. We'll see. Time will tell. But again, I think looks like an objective short op there. Maybe give it a little room. A solid weekly candlestick close above that trend line, and that one, if you want to know where I think it will go, if it rolls over here, is down here to about 40 or so. That would be my target. And to quantify it for you, that's about a 28% drop. TSN, Tyson Foods, divergent high. In the first video, a lot of the ones I covered were actually more bullish looking. I'm seeing quite a few bearish charts already as I go through these other. There's a potential downtrend line, but most importantly, here's an uptrend line. So you don't want to short this one at this point because you're just above trend line support. But if it breaks that trend line, especially on a weekly closing basis, maybe, but it might have a little more upside to go before it finally gives up the ghost. But either way, you got to watch out because we had that divergent high recently. Daily chart, there's a descending price channel. Zoom in, broke out, back tested, and we've been moving higher. Almost divergence on the PPO. We did have divergence here on the RSI. Where I could see this one going easily is up here. There's a little more upside left, about 72.30. Not enough meat on the bone for me personally to take it. Not enough upside. I see minimal upside on this one. I see about 2.5% upside till it hits this 72 level, 72.30. I'm sorry, resistance level and downtrend line resistance. So to me, that is not enough meat on the bone because I expect a pullback if and when it gets there. That's why I'd be more concerned about watching that one as a short. Looks like I had a short setup here, T1, T2, T3, potential T4. Almost reached that potential fifth target there. All right, next up would be GIS, General Mills. Looks like we had bullish divergence right here at the lows on the daily time frame, which we're on right now. It hasn't really, since a breakout, it's been sort of lackluster. It's not really doing a whole lot. However, what you'd want to watch on this one is this is a trading range right here. We had a trading range here, and let me get the box tool for this one. Most importantly, since a breakout, this trading range between the numbers are 43.21 and 41.83 roughly. So you want to look for an upside break. I'd be more inclined to take this one as a long on a breakout of that level. First target would be 45.55, and then if that gets taken out, that would be resistance. I would expect a little reaction there because it's the bottom of a big gap right here. You can see the big gap to the left. And then if that gap were to be filled, the top of the gap is around 49.80. So if this one can enter that gap, there's a good chance it may want to backfill it, and that'd be a pretty good move. That's GIS. And again, these are dividend-paying stocks, 4.64% dividend yield, not bad. There it is, long-term support. Not the most solid of support levels, but pretty decent, right around 41. We have positive divergence on the RSI on the weekly time frame. I like that. We have the PPO, no divergence on the PPO, but it is curling up at very low levels, poised to make a bullish crossover. So there's a potential long trade in GIS. K is Kellogg. We're on the weekly chart. This is a divergent low. Pretty nice. Clean bullish divergence, clean separation between the lines. PPO is curling up now. RSI is curling up. This is a daily chart. Let's see. We had a divergent low right here, led to a rally. Let's mark that for you. Divergent low, rally, divergent high, correction. Wash, rinse, repeat kind of stuff here. But again, you don't really see it here, but there was that divergent low on the weekly chart. Not crazy about what I'm seeing on the daily chart, I have to be honest with you right now. Plus, if you do want to take it long, this is the area I'm watching right here, 65.16 or so. Yes, we popped above there recently, but that proved to be a failed breakout. If you go back to the left, a lot of reaction highs here. Reactions from above there, reactions right there, another reaction there. So I think that's a significant level. If it can take it out, you can see my next two targets are right here. KR, Kroger, daily time frame here. This one again, same simple stuff, tends to play out much more often than not. Divergent low at this point led to this big correction, big rally here. We must have had this as an official trade. Looks like we checked off 1, 2, 3, hit my 3 targets. I had a potential long-term target up here at this line. We hit that as well. So check, check, check for those of you that held. Congrats. And that rally, like so many, terminated in a divergent high. You can see clear negative divergence. And since then, the stock corrected about 25%. So this is swing trading, folks. Get long when you need to get long. When the charts tell you get short, wash, rinse, repeat. Buy and hold investors in this stock for the last 2 years are down. They've lost money. Despite us being in a bull market overall, the broad markets, the stock's down, not even to the lows, just from where it is right now, about 30%. And that doesn't make up for this, paltry 2% dividend yield. So this is how you make money in a tough market, a bear market, a sideways market, or in any stock that's trading. As long as it's a tradable stock. Throw your views of a bull market, bear market aside. If you're going to trade individual stocks, trade the best looking setups, long and short. All right, next up, did I cover the weekly on KR? Let me see if I did or didn't. Oh, no, I didn't. A big potential triangle pattern. But most importantly, watch this support line here. There's quite a bit, and I say that only because we're right on it now. It's much bigger chance, a greater chance right now breaking down soon below that trend line than breaking above this uptrend line. But just something I wanted to point out. All right, we're on a weekly time frame, so we're going to jump over to Hershey at HSY. Divergent high, little correction. This one didn't play out for a lot, but a little bit of correction. Again, that was early in the bull market. Here was another divergent high here. That one played out for a drop of about 20%. And nice technicals on this one, just the way it behaves off these lines. This was a very well-defined trend line, very well-defined, especially that last part here where it fought to hold that trend line for a while and then boom, gave up the ghost. So we had a breakdown and then a kickback rally. And this is what I was saying earlier in the previous videos. Sometimes these things break down and that's it, one and done. Other times you get a kickback rally, and those kickback rallies can last, especially when you're trading off the weekly time frames, weeks to many months. So you just have to watch it, keep an eye on those trend lines. When it made that kickback rally, by the way, we had a divergent high here. All this was, and I talk about this a lot, simply an extension of the existing divergences. So this didn't mean the divergences didn't play out. I already told you that was a 20-something% drop. Then we extended those divergences, fell again, and this time we fell about 26%. So these divergences certainly play out more often than not. Not always, but more often than not. Here's a divergent high, breakdown, back test, and so far from there, I didn't even grab it, roughly close enough to the highs, about a 23% drop. Is it over? I don't know. This one, we're oversold. We were oversold here, oversold here. Indicators are pointing lower. Not my favorite. So let me see. Did I cover the daily chart for you? Yeah, I did. All right. So being that we're oversold, we've already dropped 26 or so percent. And looking at this daily chart, I'm more bullish than bearish on this one at this time. It is a setup, not a trade yet. Setup because we have bullish divergence here at the lows. That confirms a case for a potential long setup. And now we have a well-defined downtrend line. So we need the buy signal would be a pop above this downtrend line right here. That would be your buy signal, whether it comes now or whether it comes on another thrust down, as long as those divergences remain intact. And this would be my first target, 94.43. It's a pretty significant resistance level, but if we can get above there, then we come on up here at about 102.48. I don't know if we're going to see that 115.82, but if you're optimistic on the stock market and the sector and this company, that's a well-defined level and a potential target that could be hit in the coming months to a year or so. And again, dividend paying stock, almost a 3% yield. So you get paid to wait. As long as you're not stopped out, it might be worth it for you. CAG, Conagra Brands, big old symmetrical triangle here on the daily chart. These things can break either way. When you have a symmetrical triangle pattern, the indicators flatten out and in my opinion become absolutely useless. So I don't try to don't squeeze blood from a stone. You can't extract any useful information from momentum indicators when there is no momentum. This is the nature of as prices start to pinch in the apex of a triangle towards the apex, the momentum is sideways. There's no up or downside momentum. So there it is. Can't tell you much more than that other than respect a breakout to the upside or the downside, and that will probably determine the next trend unless it proves to be a little false temporary breakdown. There's that same triangle in the weekly chart. All right, a couple more, two more and we're done. Coty, COTY. This downtrend, this line I just have here because it's so well defined, but here's the lines I'm focused on. Divergence. We had a divergent low right there at that first point. I should add that second divergent line, first divergent line, really divergence line that is. That was good for a pop of about 50%. Now we put in a second, it really extended these existing divergences for a second consecutive divergent low. Pretty bullish green candle so far. So this one looks pretty good right there on the weekly chart. Oh, and not to mention, it's at long-term support to boot. We have this stock looks like it only started trading back in 2013. So this is all the price history we have. But that was its previous all-time low. That is a natural support level. Those reaction lows. Kissed that almost perfectly in a pretty big green candle off it. So this one looks good. Again, with a stop below that level to try to hone down your entries. I had a little falling price channel here. We broke out of that today or yesterday, and then followed through today with a big green impulsive candle up 3%. Initial target would be here 1439. That's another roughly. I'm going to grab that candle a little low, but about 4.5%. And maybe the potential for more. Let's see how this one plays out. And then finally, last one, SJM, JM Smuckers. Yeah, jams, jelly, all that good stuff. There it is, daily chart, nice divergent low. You can see the positive divergence. However, be careful with this one. You can see the PPO is pointing lower right now. We need to get a bullish cross. It's been kind of sloppy, the PPO line here. But again, we had this looks like a potential capitulation sell-off here. Let's see, I have to check the volume on it. I don't have my volume up right now, but there's a big red candle. But then today you can see a nice green candle, and there's a gap to be filled just above there, and then a trend line here you can watch for a potential long entry. Let me tighten that trend line up a bit. This is how I would do it. So I'm at that candle high from April 9th and try to capture as many of those, a little intraday spike above it there, but that's a trend line to watch. Again, the positive divergence says this can be more than just a little small pop. Just a little example of technical analysis. You can see back here, I must have highlighted this in the past, this bear flag. This is a bear flag pattern. I talk about these a lot. Here's your bearish flag, or bear flag, I should say. And to get the projected target, the measured target, you take the distance of the flagpole, which is the impulsive move down leading to the bottom of the flag, and then you add that to where the flag broke down, which is what I did back then at the time. And look at that. This is not mere coincidence. That was the measured target, and you can see where that stock dropped, where the correction ended on that one, and then a rally afterwards. So pretty cool stuff. I mean, this technical analysis, I may be a geek, but it never fails to amaze me. Doesn't work perfect every time, but more often than not, a lot of these things do. There's a uptrend line on the weekly chart of Smuckers. There's a minor uptrend line breakdown, but here's the bigger picture again. Like so many of these stocks, we broke in the bull market trend line. There was a breakdown, a back test right there. This one's certainly in a bear market, well off its highs, no longer in a bull market. 38% off the highs to be exact. However, that's a pretty healthy drop. 38% drop in a blue chip, or relatively stable company like this. And again, divergent low. Look at that big red candle off the divergent low so far right there. Red is in, but the candlestick body, it's reversed so far this week. It's had a nice reversal, I should say. And so it needs a little more upside to confirm these divergences, but those divergences there tell me that we could be in for a nice bear market rally in this one. So this is another check box for check the box for a potential long setup on SJM. And that's about it, guys. Again, if you enjoyed this video, give me a thumbs up on YouTube if you don't mind. This is members only at this time. If you watch this video now, again on June 8th, but it'll be released down the road later on for the public to view. This has been Randy Finney with the Right Side of the Chart. Have a great weekend, guys.